One thing that we can't kind of keep keeping an eye on here is the Volatility Index, which has picked up here over the last few days. We've seen a pickup in volatility. It's been a very compressed period that we've had, really starting back in November. Here's what you need to know before the bell this morning. Let's go through a couple of interesting markets that are going on right now. So first of all, we'll just start with the S&P. Again, kind of interesting right now. Breadth has been good in the market so far. The number of stocks above their 15-200-day moving average still healthy, but declining. We're starting to see that breadth decline here a little bit. Markets took out the 20-day moving average yesterday. Again, that's not a hugely negative thing, but again, we did this before and then rallied back above it. We'll see if the markets can rally back above this and negate that break of the 20-day. If we don't, and the markets fail from here, then we're going to probably test this 50-day moving average around 40.60. So there's certainly some downside risk here in the markets. I don't want to negate that at all, but the underlying situation of the market is still fairly healthy. Optimism is still good. Positioning is still strong. Breadth is still decent. So again, there's not a lot of concern here that we're going to see a big contraction in the markets, but there's certainly always risk. And again, one thing that we can't kind of keep keeping an eye on here is the Volatility Index, which has picked up here over the last few days. We've seen a pickup in volatility. It's been a very compressed period that we've had, really starting back in November. We had this kind of run up in volatility in October as the markets were selling off. Everybody was very concerned. It's like, oh, the bear market's back. And we're like, be careful with that. And then volatility basically collapsed into December. Volatility, and you take a look at what's going on with puts. There was no demand for put options. Those have also started picking up here lately as well. People are starting to put on a little bit of protection in portfolios against this kind of market action where we are. But we are seeing a pickup in volatility. Nothing alarming as of yet. But if we start to see volatility break above the 200-day moving average here and starting to really kind of pick up some steam, potentially we'll see a bigger downward move in the markets. But again, haven't seen any real sign of that just yet. Bitcoin continues to be interesting. After the whole launch of the Bitcoin ETFs a few days ago, of course, they all got approved, and finally the SEC and Gensler approved the issuance of Bitcoin. So we have spot Bitcoin ETFs, and so those got issued out. And ever since then, Bitcoin's just kind of sold off here. So not a lot of action. You would have thought that we would have seen a lot more buying activity because of those ETFs come in, but we really haven't seen that yet. And again, not enough data yet on these Bitcoin ETFs to really do any analysis, or I'd show you some charts. We need another month or so, and then we can start looking at how they're performing relative to the spot Bitcoin ETF. But jumping over to gold here also, as we take a look at that, gold continues just to really kind of grind here as well. Really hasn't done a whole lot, despite the fact that markets were all over the place last year, and we saw a good bit of inflationary pressures. Gold had a decent rally. We got down to about 1,800, rallied up to 2,000, but really kind of remains in this range. And gold has just been really kind of trending sideways here, beginning to take out the 50-day moving average yesterday. And so we're going to kind of watch that here. Potentially the 200-day sitting around 1,970-ish. So again, there is some downside risk to gold prices near term. We are in a sell signal, getting a little bit oversold here short term, but certainly some downside risk within this kind of topping pattern that we see going on in gold. Again, not overly concerning here just yet, but certainly kind of a corrective consolidative action at work in gold prices. And lastly, of course, we would be remiss not to talk about interest rates. Interest rates, moving back up here. We talked about this. Interest rates have gotten very, very overbought, actually, on that decline. They're the inverse of bonds. So during that decline in rates, bonds got very overpriced. Yields got very overbought. Seeing a bit of that reversal. It's not been dramatic. This has actually been a very healthy correction in interest rates. We're working through that sell signal. Again, it's inverted because of bond prices. This is a sell signal that normally looks like a buy signal, but that's a sell signal for bonds. Still working through that, working through that process. Interest rates getting oversold here. We're going to get a decent opportunity here, probably somewhere around the 50-day moving average, around 4.15, 4.19%. On the 10-year Treasury rate to start looking to add exposure to our bond portfolio as well. So we're getting there. This has been a very nice, healthy correctional process. So keep a watch on bonds here. We'll have a good opportunity there to add exposure as well. That's what you need to know before the bell this morning.